Well, I think when you look at growth, there must be some supporting pillars. Okay, I think there are quite a number of pillars to support growth in our view. The first pillar is actually the private, the robust private investment upcycle. If you can look at the chart on the left, I think 330 billion. I think that was the achievement in 2023. That was the approved private investment registered by MIDA. Okay. So I think if you look at the numbers, it was the highest in the past decade. In fact, it was also higher than what it was in 2021. In 2021, the approved private investment hit 309 billion. Back then, we thought it was a record, and hardly you probably have other years to beat this kind of momentum. But okay, and if you look at the numbers post 2021, in fact, if you look at the average for the 3 years, 2021, 22, and 23, on average, on a per annum basis, per year basis, the actually approved private investment average about 300 billion. And when you look at the data points from 2010 to 2020, the average was less than 200 billion per annum. So in essence, basically what it means here is there are actually more investors, foreign investors, local investors, investing in the economy, in the country, which is actually very important for growth moving forward. Okay. And I think if you look at the data point, I think what is important to you and me is probably what have we achieved in 2024. Okay, the good news is when you look at the first quarter numbers, it was up about 14%. I think first Q of 24 was 84 billion. Last year, same period, first Q, it was 74%. So it is actually quite on track. So it was a strong growth. Okay, in fact, if you look at the red bar here, I indicated that MITI only target 5% growth. Okay, but I think in first Q, it was more than 10%. Okay, and of course, when it comes to MIDA, they also provide some updates. In May, also, they provide some updates. The projects pending approval, what they have in hand, I think they have about 68 billion. Yeah, correct. And they are about 60 billion high potential investment leads in their book. So when you look at the numbers, it jive well, okay? And more importantly, I think when you look at the other initiative, I think if you look at the country, the Prime Minister, we have been talking about other strategic initiatives. For instance, NETR, the National Energy Transition Roadmap. You have the NIMP, the new Industrial Master Plan. Then you have the MOU for the Johor Singapore Special Economic Zone. And lastly, you have the National Semiconductor Strategy. So all these initiatives will continue to attract investment. Okay. I think when you look at the second pillar, it is actually about external demand recovery. Okay, this is the second pillar that would actually help to support the economic growth. Okay, I think if you look at the second pillar, we are actually looking at from two perspectives. One is actually at the electronics cycle, and the other one is on tourism. Okay, I think Malaysia, we are just like other ASEAN countries. We are still very much an export-driven economy, and hence I think we will continue to benefit from the current electronic or tech cycle recovery. Okay, if you look at the yellow line here, this line actually tracks the global semiconductor sales. It actually started to bounce back from January 2023. Okay, it went all the way up until the latest number. And if you look at the purple or blue line, depends on how it appears on the screen, basically that number tracks the Malaysia total exports. So as you can see, towards after the data point after January 2023, whenever the yellow line went up, the purple or the blue line also follows suit. Okay, so this in a way shows that Malaysia is still very much benefiting from the tech recovery cycle. And if you look at the World Semiconductor Trade Statistics, I think in June they actually raised their global semiconductor sales forecast for this year. Okay, back then it was 13%. Now they have actually raised it to 16%. And for next year, it will be another good year because 12.5% growth for next year. The second element of the second pillar is actually tourism. Okay, I think if you look at the bar here, okay, After receiving 20 million foreign visitors last year, okay, basically the Ministry and Tourism, Art and Culture is targeting 27 million tourist arrival this year. Okay. And if you look at progressively up to 2026, the ministry actually aims to bring in close to 36 million of tourists to the country. Of course, I think if you look at 2026, I think it is not surprising because in 2026, that is the year of Visit Malaysia year. Okay. Obviously, I think if you look at the blue bar this year, we also we track tourists from China. We also expect it to hit a record high of 5 million this year. Simply because I think if you look at the visa waiver program, it has been extended up to end of 2026. And this was achieved during Chinese premier visit to Malaysia in June. Okay, so when you look at tourist arrival, tourism sector to Malaysia, it is also very important, not just from the spillover spending from the tourists, but I think the jobs creation, which will eventually benefit the local economy. The third pillar is actually the resilient consumer spending. Just now we talked about tourism sector. Yes, we rely on tourists to help spur our economy, but domestically, do we have other measures to drive consumption? Yes, they are. Okay, because I think if you look at the domestic spending, okay, basically we have quite a favorable landscape. For instance, we have a very stable job market. I think our unemployment rate is quite low. Income growth is there. You see, I think the minimum wage is now 1,005. Market talk about 2,000. But of course, that is subject to discussion and review by the government. Okay. Then after that, we have higher cash handout. Then after that, we also have the introduction of EPF account tree. Okay. I think pertaining to account tree, if you read from the major press, I think the second finance minister was quoted to say that the account tree withdrawal in the first year was estimated at about 15 billion ringgit. So again, big money to help drive the domestic economy. And lastly, come December, the civil service will enjoy their more than 30% salary hike. Okay. And I think that again would actually translate about 10 billion liquidity for the economy. So again, if you look at all these income measure, income growth, income support measure, they will be lending support to the domestic economy. They will be driving consumer spending growth.